Get ready for a major revelation. In just 48 hours, something big could shake up the world of Bitcoin ETF. Don't miss this crypto thriller. The countdown is ticking. Join the excitement, and let's unravel the countdown of the century. Disclaimer. In the fast-evolving landscape of cryptocurrency, all eyes are currently on the potential approval of a spot Bitcoin exchange-traded fund by the U.S. Securities and Exchange Commission. This development holds significant implications for the adoption of cryptocurrencies, not just in the United States, but globally. 11 prominent players in the asset management arena, including BlackRock and Valkyrie, have submitted 19 B-4 amendment forms in the latest phase of their quest for approval. While this might sound like an alien language to some of you, here's an explanation so even a 5-year-old would understand. In the world of finance and securities regulation, a 19 B-4 amendment form is a document submitted to the SEC as part of the process for getting approval for a particular type of financial product. In this case, a spot Bitcoin ETF. Imagine you want to organize a big party in your neighborhood, and you need permission from the local authorities to make it happen. Now, the 19 B-4 amendment form is like the detailed plan you submit to the authorities, outlining everything about your party, from the schedule, activities, safety measures, and more. This plan helps the authorities understand exactly what you're proposing and decide whether to approve or deny your request. In the same way, financial institutions like BlackRock, Valkyrie, and others want to launch a special financial party called a spot Bitcoin ETF. To get approval for this, they submit a 19 B-4 amendment form to the SEC. This form provides all the necessary details about the ETF, helping the SEC understand how it works, its structure, and the potential impact on the financial neighborhood. The SEC reviews this party plan to decide whether to give the green light for the ETF or not. It's a crucial step in the process of introducing new financial products. As the week comes to a close, the clock is ticking for the SEC to make a pivotal decision on these spot Bitcoin ETFs. The looming deadline adds a sense of urgency, with the crypto community eagerly awaiting a verdict that could shape the future of digital asset investment. Experts speculate that the final approval or denial of the spot Bitcoin ETFs could occur before the impending deadline, possibly influencing the landscape of crypto adoption both in the United States and globally. The anticipation surrounding the final approval or denial of the spot Bitcoin ETFs just before the looming deadline is likely to ignite a mixture of excitement and nervousness among crypto investors. It's akin to waiting for the results of a crucial exam that could significantly impact one's academic future. On one hand, there's the thrill of the possibility of a groundbreaking development that could open new avenues for cryptocurrency investment, potentially driving up market enthusiasm. On the other hand, there's an undercurrent of anxiety, as investors grapple with the uncertainty of whether the regulatory nod will indeed come through. It's an emotional roller coaster, where hope and trepidation are intertwined, creating a dynamic atmosphere within the crypto community as they eagerly await the regulatory verdict that could shape the trajectory of their investments. While optimism circulates among some analysts, citing insiders' information on the finalization of S-1 documents, the broader sentiment among U.S. financial advisors remains cautious. And here's something very important. If you didn't know, an S-1 document is essentially the financial playbook that a company, or in this case, an entity seeking to launch a financial product, provides to the SEC. Think of it as a comprehensive guide that covers everything about the company's financial health, its plans, and the risks associated with its offerings. In simpler terms, imagine you're considering investing in a new business. The S-1 document is like the detailed brochure the business hands you. It contains information about how the business makes money, its potential growth strategies, and the potential pitfalls it might face. It's a tool that helps you, as an investor, make an informed decision about whether or not to invest in that business. In the context of a spot Bitcoin ETF, when analysts talk about the finalization of S-1 documents, they're suggesting that there are indications or insider information that the paperwork required to launch this specific financial product is reaching its completion. This news can spark optimism among investors because a finalized and well-put-together S-1 document is a crucial step toward regulatory approval. It signals that the company or entity is diligently providing all the necessary information to the SEC, potentially increasing the chances of approval for the new investment opportunity, in this case, the spot Bitcoin ETF. Various experts in the cryptocurrency and financial space have shared insights and speculations regarding the possibility of final approval for spot Bitcoin ETFs before the looming January 10th deadline. These experts point to multiple factors contributing to the optimism surrounding this timeframe. One notable perspective comes from Bloomberg ETF analyst Eric Balchunas, who expressed confidence that the SEC is moving swiftly towards approval. Balchunas suggested that the finalization of S1 documents is in progress and hinted at a potential launch as early as January 11th. This insight, purportedly gathered from multiple sources, adds to the optimistic sentiment within the industry. The speculation hinges on the notion that the SEC is aligning various parties to meet a specific launch date, indicating a coordinated effort to bring spot Bitcoin ETFs to the market promptly. This kind of coordination is seen as a positive signal for those anticipating regulatory approval. Bloomberg ETF analyst encapsulated the prevailing sentiment, stating, "Yeah, it's basically done. The latest I'm hearing from multiple sources is that final S1s are due 8 in the morning on Monday as SEC is trying to line everyone up for the January 11th launch." His statement reflects a high level of confidence in the near completion of the regulatory process for spot Bitcoin ETFs, suggesting that the finalization of S1 documents is well underway and hinting at a coordinated effort to facilitate a potential launch shortly after the January 10th deadline. This perspective contributes to the overall optimism circulating within certain circles of industry experts. However, it's crucial to note that despite such optimism from some experts, there exists a degree of skepticism, particularly among U.S. financial advisors. While insiders may be suggesting a swift approval process, the broader sentiment remains cautious, with only a fraction of financial advisors expressing confidence in the approval of a Bitcoin ETF within the current year. A recent survey revealed that only 39% of US-based financial advisors believe in the approval of a Bitcoin ETF in the current year, reflecting the uncertainty surrounding this groundbreaking financial product. The cautious stance taken by the majority of US-based financial advisors, as revealed by a recent survey, is rooted in the intrinsic uncertainty and complexity surrounding the approval of a Bitcoin ETF. This hesitation is crucial during such times for several reasons. Firstly, regulatory decisions, especially concerning innovative financial products like a Bitcoin ETF, can be unpredictable. The cautious approach among financial advisors reflects an acknowledgement of the dynamic nature of regulatory frameworks and the potential for unforeseen hurdles or delays. Secondly, the cryptocurrency market is known for its volatility. Prices can be heavily influenced by news, regulatory developments, and market sentiment. Financial advisors exercising caution understand the need to shield investors from potential market turbulence and sudden shifts in asset values that may result from unexpected regulatory outcomes. Thirdly, the skepticism observed among financial advisors may stem from the fact that the crypto industry is still relatively young and evolving. New financial instruments may face scrutiny and a more thorough regulatory evaluation. This caution is a protective measure, ensuring that financial advisors guide their clients with prudence and a keen awareness of the risks associated with groundbreaking financial products. In essence, the importance of caution during these times lies in safeguarding investors against potential downsides, aligning expectations with the inherent uncertainties in the regulatory landscape, and maintaining a balanced and informed approach to investment decisions in the volatile realm of cryptocurrencies. But what is your opinion on that? Comment down below. I'd be eager to read your opinion. And with that, we come to the end of this video. If you enjoyed the video, then please like this video and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video to as many people as possible. Let's get this news out there.